Welcome to the NAMB Podcast, where we bring you the voices that drive the mortgage industry. Join dynamic hosts Ginger Bell and Matt Shields as they dive into bold conversations with top experts, industry leaders, and change makers from across the country. From insider insights to game-changing trends, this is your front row seat to what's happening right now in the world of home finance.
Oh, hey there. Welcome to the NAMB Podcast. My name's Ginger Bell, and I have my co-host, Matt Shields. Hey, Matt, how are you?
I'm doing good, Ginger. How are you today?
I am good. And Matt, I'm going to let you introduce our special guest today.
Well, we have a very special guest, Valerie Saunders. She's the chief executive strategist for NAMB. She's a published author. She's a podcast host. And Val does a little bit of everything.
Absolutely. Welcome, Val.
Thank you. Thanks for inviting me.
Yeah, well, we're happy to have you here. You know, Valerie, you've been involved in the NAMB Association for many years. That's how you and I met. And I know you do a lot of things behind the scenes. And so I want to jump right in because you actually last week were at an ARMOR conference, which is the American Association of Mortgage Regulators. Is that right?
Yeah, residential mortgage regulators.
Residential mortgage regulators. There's another R in there for something. Yeah. But here's the thing with you, Valerie. You do so much behind the scenes of going to these conferences and bringing back information and relaying that to the board, what we need to pay attention to, what we need to do. So first of all, thank you for that service. And then second of all, tell us what happened, because I'm sure there was some things that came up there. So let's just jump in right there.
Sure. So I'm sure you can imagine how exciting it is with a room full of regulators from 50 states. So yes, the air was electric.
Yeah.
But there was a lot of conversation about a variety of topics, and a lot of it did focus on the regulator themselves.
Okay.
I don't know how many people are licensed in multiple states, or a state that has recently adopted SES, which is a examination system.
Wow.
That a lot of the state regulators are utilizing because what they're trying to do is establish uniformity.
Right.
And, a big thing is, hey, if you just audited a company that is licensed in Illinois and I'm in Texas, and this is the same company and they're also licensed in Texas, I could use your audit to fulfill my audit. Maybe I have some state-specific things I need to supplement, but I can use a lot of the information that you've gathered to complete my audit. So because, most states state regulators don't have gigantic budgets.
Right.
So they're on a shoestring staff. I know I'm here in Florida. Our state, our Office of Financial Regulation, they don't just regulate mortgage. They also regulate money transmitters, check cashers, so they have other industries that they're also dealing with, and it's the same group of people. So a lot of it was, a discussion on SES.
I know. And you've got a full day to be planning there as well. So, and I'll let you get a break while you're doing that. And so for those of you who are listening, just so you know, a lot of this has come about as far as the conformity and the regulations for two things. First of all, the CSBS, which is the Conference of State Bank Supervisors, which has kind of created this an opportunity. But then also the CFPB, which gave a lot of those regulatory guidelines when they were first created. Now, obviously, we know that's being taken away. And so that's why the states have a lot more on them as far as the state, regulations and their oversight for that. So hopefully that gave you enough time to be able to catch your breath there.
Yes, thank you. Yeah, and the CFPB did offer a lot of assistance to state regulators because, the CFPB was doing a lot of audits.
Right.
So the states could also have utilized their audits, or if they're doing multi-state audits, they were able to work together and gather information, to kind of lighten the load as they're auditing individual companies, because some states have requirements within their state lending law that they're required to audit companies ever so many years.
Right.
Some states, like Florida, we don't have that in our state lending law. Our audits are typically more complaint based.
Mm-hmm.
So, it's kind of a mix. But some of what was talked about was AI. Just a kind of a conversation of, as we look at all these new AI tools that are coming in, how does a consumer know that they're communicating with a licensed person and not a bot?
Right.
Because what regulators, and of course us as loan originators, what our primary focus is consumer protection.
Right.
So how do we make sure that the consumer has that level of comfort and protection of whoever they're dealing with to obtain a loan? You have, some people that are very sophisticated and they don't want to talk to a person. Maybe they are totally comfortable with doing everything electronic.
Right.
They'll apply online, they'll communicate online. If they have a question, maybe there's a chat box that they can go to on the website, whatever the case may be. But a lot of people don't necessarily want that process. And first-time home buyers really probably shouldn't have that process.
Right.
I agree. Absolutely.
And so we have to make sure, us as an industry and them as regulators, that the consumers, first-time home buyers in particular, are getting the loans that they should be receiving. They're getting them in a responsible manner. Their financial information's being protected. They're getting the appropriate information and guidelines that they should be receiving. So at the end of the day, they know that they like the house, but they also like the mortgage that they got.
Right.
And so, how all of those things are going to be incorporated, and they have to be incorporated 50 different times.
Right.
So, we don't have any AI guidelines in federal lending laws, at least not yet. I'm sure that's going to happen, but it's not a topic of conversation at the moment that I'm aware of.
Yeah.
So each of these states are having to do it. Some have implemented some AI requirements, but a lot probably haven't. Not every single state's legislature meets on an annual basis.
Right.
Some meet every 2 years. I know, like in Florida, our legislature only meets 90 days.
Yeah.
So if you can't get your work done and your bill passed in that 90-day time frame, it's rolling over to the next year.
Yeah.
Oh, wow.
So that was a lot of conversation. Another point of discussion was just compliance in general and what it does look like in this current new world of the CFPB really being kind of cut off at the knees.
Yeah.
And not providing a lot of guidance or information. But one of the big things that we are all waiting on is the CFPB in early June sent over some items that they wanted to look at to the Office of Management and Budget, the OMB. One of them being potential LO comp rescission. And what would that look like? Because a lot of people are like, oh, well, LO comp sucks. Let's just get rid of it.
Yeah.
And then, we can all go back to doing what we were doing. But there is some language within the Dodd-Frank Act, because the CFPB had the ability to create guidance, to create rules and regulations that allowed the industry to operate in the manner in which we're accustomed to operating.
Right.
Outside
some of the guidance that came through Dodd-Frank that wasn't real clear. And I think that's a lot of it.
And LO comp was one of them.
Right.
So, prior to, we had obviously yield spread premium. Now we have lender paid comp. But Dodd-Frank doesn't really have a mechanism in it for lender paid compensation or yield spread premium. So there was a discussion of, if we're rescinding LO comp rules, now we're reverting to Dodd-Frank. What would the world look like if you only had borrower paid? Can a mortgage broker business operate effectively on borrower paid only? Would that basically force, I know I'm looking at it for my little mortgage broker business. I would more than likely get licensed as a lender so that I would have the service release premium option that I'm not going to have as a broker. So, there's a lot of different chess pieces moving around on the board. And two of our other folks, Mike Farrell and Jim Neighbors, were at a conference in DC last week where Mark Calabria was at, and he made comment in that conference that 2026 is their primary focus is mortgage.
Interesting.
So we don't really know what that's going to look like.
Right.
We can speculate on a lot of things. We know LO Comp's going to be one of them. But what else is there going to be?
Right.
Is it going to be QM? Are they going to look at changing parts of Dodd-Frank? There's been a large discussion on RESPA reform coming from MBA. Is everything on the table? And if everything is on the table, what does that look like when we're also hoping that rates are going to go down?
There's a lot going on.
Yeah.
A lot going on.
So I guess at the end of the day, all of that to say, there is value in trade associations.
100%.
Whether it's national or state or local, being that this group of people, whoever association they're serving, have chosen to take time to represent their industry,
right,
and bring information back so that we all can be informed and we all can work towards being able to continue to do the job that we've chosen as a profession.
Yeah.
So that's, a plug to join NAMB, or I know Matt is with the Ohio Association. Ginger was involved in Oregon for a long time. I'm here in Florida. So whatever association it is a grassroots effort.
Right.
And so we all need to.
Well, and part of that is, and that's why starting the podcast is to be able to get the information out on a consistent basis, because as these things happen, it's important to stay aware and be aware, because there are things that come up, whether it's in Ohio or Oregon or Florida or on a national, that we need to bring to people's attention. So they need to be aware of it, because, you can't just blindly sit and say, oh, wow, this is my business. It's important to get involved and to not just pay attention, but where do you need to speak up? When we have calls to action, what that looks like, getting involved, I think on a state level, and there's lobbying you can do on a state level. And if we're looking at our state regulators getting involved as well, there could be changes that come in there. So now, okay, maybe the CFPB is not as big as it used to be, but that doesn't mean it changes for regulatory oversight at all.
No, not at all. I mean, the CFPB is one of many regulatory agencies.
Right. And fairly new.
Before there was a CFPB, we were all regulated by HUD. And we had the Fed Reserve that was regulating LO Comp.
Yep.
So just because one agency's work is significantly diminished, it doesn't mean that there isn't another one that's doing the heavy lifting.
Exactly. Yep. Yeah. And that'll come in. Well, listen, Valerie, thank you for the update. We totally appreciate it. And I know you've got another you're going to a webinar now that you're doing. So again, thank you so much. It means a lot to be able to have you doing so many of these events and things that you're doing on behalf of the entire industry, not just mortgage brokers, but everyone. So thank you for that.
Well, thank you. I obviously love what I do. So.
That's great.
It shows. It definitely shows.
Yeah, absolutely. And so for those of you who are listening, we want to thank you for listening to the NAMB podcast. You can find us at all streaming platforms and at nambpodcast.com. And if you're not a member of NAMB, become one today. So thanks, guys. Thanks, Val.
Thank you.
Okay, bye.
Thanks for tuning in to the NAMB Podcast, brought to you by the National Association of Mortgage Brokers. For more episodes, resources, and guest interviews, visit nambpodcast.com. Don't forget to follow, share, and subscribe.